If you are a Singaporean investing serious money into the VOO, this is for you. And there are three essential things that you need to understand. The first one affect your returns every single year. The second one will affect your family for decades down the road. And the third one is what I see commonly that nobody really planned for it, which is essential for your retirement. So understanding these three things changed the way I invest forever. So let's dive right into it. So I think let's talk about the VOO first. So VOO is basically the S&P 500. Everybody loves it because it is cheaper in terms of expense ratio compared to SPY itself. And it is a very easy way that you can just invest and get exposure to the top 500 companies in US. So I totally get it why you would do that, because previously this was what I thought too. Just get the top exposure in the US itself and then basically investing is settled. But the more I studied and learned about this investments on VOO, the more I found out there are things that I need to take note of. So let's talk about the first thing. The first thing itself is actually the dividend tax, which is what they call the withholding tax. So this withholding tax, in short, basically whatever dividends that VOO is paying to you, which is about 1%, what happened itself is that the US government will actually do a deduction of 30% from this 1%. So if you think about it, if let's say today you are relying on VOO dividend as an income, and every time they pay you a dividend, which is every 3 months, 30% of the dividends itself will be taxed. Imagine if you are buying a property. Buying a property also, you are subjected to very heavy taxes, and people are trying their best to avoid all these taxes. But if today as a Singaporean investing into VOO, you are being subjected to this 30% withholding tax on the dividend, which is a very costly expense. And in the long run, especially if you are investing in decades, it will affect your returns. So that is the first thing that I think we need to take note of. And then what's the second point? The second point itself is something that can affect your family for decades, which is currently for VOO is actually an American listed exchange traded fund, ETF. So what does this mean? It basically means that because there is no tax treaty between Singapore and US, and any investments above 60,000 is subjected to a tax up to 40% of the amount that you have invested. So if today your intention is to plan your retirement using VOO, then let's think about it. Basically, if you are aiming to get more than $1 million, because it might be Singapore, things are very costly, things are expensive, you would want to have a seven-figure portfolio. So if it's a $1 million portfolio, 40% tax due to estate tax, meaning the person passed on, a tax have to be payable to the government. And that itself, it can be 400,000 of $1 million. How is your family going to get through this shock of the estate tax? So an American listed ETF, right? Basically, they face this issue. So what is the third thing that I noticed that nobody really talk about regarding about American listed ETF? So there is one thing. Think about it. If today you are investing in VOO, you build your portfolio to $1 million. So even without the withholding tax or estate tax issue, let's put that into the back of our mind. Imagine this. You are going to rely on the income of your portfolio. Or you might be say, I want to sell some of my units away, I liquidate some of my investment, and I start to spend. But the odds of you doing so and feeling comfortable and happy doing that, right, is going to be very low. Due to the fact that, can you imagine that when you are retiring, you see your investment portfolio keeps on dropping every single month? That is not a very well planned out portfolio. So likely some of the people will change their strategy when they are doing their investment portfolio for retirement, which is they might try to create an income out of it. And you might also say, Vincent, VOO actually also pays about a 1% dividend. But a 1% dividend on a 1 million portfolio is only 10,000. So how can one actually survive on just 10,000 a year for retirement, which is not going to be a significant chunk of money? But even though, let's say the amount is low, then the withholding tax issues come into the picture again. Can you imagine whatever dividends that they have to give you, they charge you a 30% tax. And this 30% tax, right? What's next is Even while we are working, Singapore personal income tax, the highest is 24%. And that itself is if you're earning $1 million a year, has not even hit 30%. So the last part itself is more of like the planning of dividends is very important, because if you did not notice that all this withholding tax is eating into your dividends, chances are you are actually paying a very high cost of getting your retirement income, which is in the first place is not much due to the fact that even a million portfolio is only 10,000 a year. Relying just purely on VOO to decumulate during your retirement years, it can be an issue because the 1% dividend is not going to be sufficient. And the second thing, what happens is that VOO actually only pays every 3 months in terms of the dividends. So if they are paying every 3 months for the dividends, would you rather to have something that pay you monthly or pay you quarterly when you do not have any more income? A well thought out portfolio will not miss this point. The portfolio should pay you a monthly income and without all these taxes available. So this is very important. So if today you are structuring your portfolio and your portfolio does not pay you any yield that is above the inflation rate or even CPF rate, basically when you are retired with just holding a VOO, there are going to be some of the issues that I mentioned earlier. No monthly dividends, taxation on your dividends, very low dividends, which means that retirement itself, it can be an issue unless you are willing to sell off your assets to fund your retirement, which we will go to another issue, which is you are going to see your investment portfolio starts to drop. So I think the first thing first is I have covered in a few of my earlier videos is if you want to avoid the withholding tax and you want to avoid in terms of the estate tax, you have to do an Ireland domicile ETF. So those Ireland domicile ETF listed on the London Stock Exchange, they do have withholding tax, but instead of 30%, you're paying about 15%. So compounding through decades, this makes a lot of difference. And that itself, it might be the VWRA or the CSPX, which is the CSPX is actually the S&P 500. And then the VWRA is actually the one that I am invested in, which is they invest in the whole world, developed countries and developing countries economy, which is much more diversified. This will help you to reduce all the taxes that I have mentioned earlier. But it did not solve the problem of the last point, which is low yield, no monthly income, which is important. So I have also invested in funds that pays a monthly income. So that itself is to be prepared. If in a scenario, once I hit retirement, some of the funds itself in the ETFs, it will be channeled into funds to actually pay a dividend that gives me every single month without any taxation issue and trying to aim the objective of getting a yield of above 4%, which is in the current market context, it is not that hard to achieve. So that is what I have been doing for my own portfolio. So if you are investing in your own VOO or SPY, these are just some of the pointers to take note. Hope that I'm able to share with you another perspective to enhance your overall portfolio. And do hit on the like and subscribe button if you have enjoyed content like this so that more videos like this will be recommended to you. Thank you for watching to the end, and I look forward to sharing more with you in the next video.